While we're waiting for others to join, you can be proud attendees of Oakstone's inaugural webinar. This is our first, so we welcome feedback, hopefully constructive, and yeah, be sparing with the tomatoes at various points. Yeah, we thought that the topic, obviously the reason you've attended is the topics are hopefully going to be useful and interesting. The market has been an interesting one to be part of for the last few years, that's for sure. And even now it's changing, you know, within the last few weeks, and some of you will have seen this for yourself, and you know, we've kind of picked up on a few trends even before since we started to put this webinar in place and invite people to attend. There's new developments that we're spotting, which we plan to cover. If we miss anything, then shout. You know, ultimately, you know, we're in a position where we will be happy to answer any questions that we have along the way, and yeah, we'll be happy to take it from there. So we'll just give it another minute, and then we'll get going. I don't know, Steve, have you got any jokes or anything you can tell?
No, but I'm sure this first webinar may produce some. We'll release the blooper reel at the end. Hopefully they'll be minimal, but we will, we will hopefully duck and dive as we go along. But as I said, hopefully you can all take something from it and enjoy it along the way.
What screen are you seeing there, Steve? The same one?
I am no. So I've got your slides. Yeah. So I've got your first and last.
You don't want that.
No.
So you want that one.
That's
there we go. Okay. One more minute then, and we can get going. I'm going to move back to my desk so that I can have my notes as well.
Giving us a tour of the office.
This is it. Why not? Giveaway of everybody. Nerve central of Poole, Oakstone.
There we go. I think also, Andy, if we crack on, we'll do intros, and then if people are joining later, they won't miss too much, and then we can get stuck in.
Yep, go for it. Do you want to crack on with that then, whilst I sort my screen situation out?
Yeah, sure. So, so I'm Steve, as you may have guessed from the back and forth. I've been at Oakstone for over 17 years now, so man and boy for my sins. You know, I'd say we're pretty broad. So the client base that I tend to deal with, you know, ranges everything from robotics through to automation and CDP and MarTech, and I cover personally anything from senior leadership hires through to what I call growth hiring, so traditional sales, marketing, and pre-sale stuff. It's probably that's me in a nutshell.
Yep, which will bring nicely onto me when I've clicked the necessary button that I need to click, and then we're away to go. Bear me 1 second. Right. Tell me that's all good, Steve. We get going.
Perfect.
Excellent. Okay. So yeah, I've been with Oakstone for 15 years, based in Poole, and I look after a team of predominantly non-technical SaaS recruiters based here. We have coverage across the world, pretty much, all of EMEA, parts of APAC and the US. I like food, I like drink, I like things with engines. I don't like exercising, but fine, I have to do that fairly regularly because I like my food and my drink. And I'm a stubbornly bad golfer, unlike Steve, who's actually good at it. So that's a bit about me. Yeah. Flagship accounts that I've been lucky enough to work with over the years are namely, I would say, Cooper, having provided them with over 100 people globally over the last 9 years. And others, Seismic Software, we've provided them with over 40 people. More recently, we're working with pretty cool companies like Clary, who are leading the RevOps space, and a new one that we've done a lot of work with in the UK and the US recently is Korn Ferry, with their digital division. As they move more to a digital go-to-market strategy, they've been sort of utilizing our help and support on our network to identify the right people in an industry that they're not necessarily all that well experienced in. So, as I say, welcome to the inaugural webinar, and thanks for bearing with us while we get going on that. Oakstone, for those that don't know us, we're a search firm, and we're a search firm that apply proven executive search methodologies to all levels of hires. As I mentioned, we work almost globally, and we work cross departments. So we work on sales, pre-sales, professional services, customer success, marketing, and engineering. We're mainly UK based. We have a US entity that over the years has fluctuated between being manned and unmanned. It's now manned again, with a guy based in Chicago. And as you can see from the screen, we've been lucky enough to work with some, I would say probably 80% of the companies that we work with are Gartner or Forrester leaders in some way, shape, or form. That's a bit about us and our exposure, and therefore is kind of the source of where our experience and our observations are going to be coming from that we're going to share with you today. So breakdown roughly of our agenda is to talk through the trends on the market, the specific regional challenges, the buoyancy of the market, salary info, important information about an efficient hiring process, which is where I believe quite passionately that's where a lot can be won and lost, more so than ever in this particularly competitive candidate-driven market. And then a summary of the key takeaways. As I mentioned, if you have any questions, just enter them into the Q&A box at the bottom. We'll do our best to answer them as we go through. We've also allowed a bit of time at the end to cover any that we've either missed or need to Google the answer for, which I'm sure won't be the case. So let's crack on then to trends of the market. You will all have seen that it's been a very candidate-driven market. It's hyper-competitive. The evidence of this has been that candidates are commanding higher salaries now than ever before. We've had several conversations with who we would class as sort of A-player candidates, whether they're sales, pre-sales, whatever. And I remember vividly one particular candidate saying that he wouldn't even consider looking at a role that wasn't paying. This is an enterprise salesperson that wasn't paying at least 150K base salary, which is mind-blowing and, in my view, unnecessary. And we can come on to why, but evidence of why this is a competitive market. Another issue is candidates that are entering into hiring processes and then dropping out, and this is simply because of how competitive it is, and that they're processing many hiring processes with lots of different companies at any one time. And we will be addressing today on how best we handle this to minimize dropouts, to not get caught into this unnecessary high salary situation. So yeah, that's part of what we want to cover today. What is probably more timely and has happened more recently has been to do with the US economy slowing down, and still the majority of businesses that we work with are US based, but only just these days. It's a fairly even balance of European based and US. But there's been growing concern over the recent weeks around the slowdown of the industry, and the US economy slowing down. And normally in recruitment, that can be a daunting and dangerous prospect. because if a market is slowing down, then growth slows down. If growth slows down, companies don't hire people as quickly or as aggressively as they otherwise would. But I actually welcome it. I think if there are less roles on the market, and I hope I'm not being naive in this, but if there are less roles, it takes it away from being a candidate-driven market, and it restores the balance. And therefore, in our view, we are hoping to continue to work with interesting leading companies that will continue to grow and will continue to have innovative technology, and therefore, we should be okay. But we're not then having to rub shoulders when looking to identify the best candidates and bring them to our clients as we will, because not as many companies are looking to hire these people and throw silly money at them. So we're seeing that as a positive, and that that should restore some balance. And for some of our European-based organizations, the war in the Ukraine is having an impact on their ability to write business. And for businesses that are German-based and that's their primary core market, that's obviously having a knock-on effect. So that's meaning that they're needing to hold back and not be quite so aggressive in their growth, not just in Central or Eastern Europe, but globally, if that's obviously where they're headquartered. So there's some of the trends. We'll come on to those areas and how we can navigate best through those. So specific regional challenges, and what we're looking to identify here is how easy or difficult it is to identify, attract, and bring quality people into your organizations if you're hiring into these particular regions. Every region has its own challenges. We've just picked 3 for the moment. There are more, and please, as I say, make a note in the Q&A if there's a specific territory that you want to know about, either on this call or following off the back of this. One particular one is Germany and the DACH region, and the particular challenge in this region is to drive responsiveness from candidates now more than ever. Why is this? Well, there are many theories for this, but from the conversations that I've had to understand the challenges that candidates have faced in Germany specifically, it's been clear that they have become kind of fed up really with being hammered by UK recruiters that are spamming them with emails about this great opportunity that simply isn't right for them. And so when you're trying to contact people and you've got a good role and that is relevant for them, you're getting caught up in all the noise that's coming from other recruiters and particularly UK ones. So what do you do about that? If you don't have a network, I don't really know what the answer is. You're going to struggle. That's the bottom line, and you just have to be prepared to take time. In Germany, culturally, they would expect recruiters, rightly so, in my opinion, to put their needs and what's important to them first. We at Oakstone always do that, but if they don't know us, they don't know that we do that. Thankfully, having been recruiting into Germany for 27 years as a business, for myself, having done it for 15 years and Steve for longer, you build up a network and you build up relationships and you build up trusted relationships. So as we look to hire people in these regions, we're not having to rely on LinkedIn and sending emails to make contact with these people. Because we have existing relationships, or we have colleagues that have existing relationships. So we can pick up the phone, we can talk to them, we can understand what their current situation is, what's important to them, and then identify if the role that we're working on or the roles that we're working on are well suited. And if it's not the right time, then we agree to follow up. As a true search firm, we do not rely on those relationships. We simply can't afford to just purely talk to people that we already know. Otherwise, we're never going to grow. So we're always looking to identify new people and make contact with them. But we then face similar challenges to companies that don't have the sort of network that we have, and therefore it just takes more time, more patience, and a longer-term strategy. but certainly sending them a job description, which we would never do, but for the companies that do try to send job descriptions and, hey, have I got the role for you, and that, you're going to burn a bridge before you've even got going. So that's the particular challenge there. But the main solution to that is to work with an organization that can provide you with a network. Mark, I'll see a question come in there. I'll just go through the US and UK, and then we can run through that.
Good. Andy, just a quick one to add to Germany in particular. I mean, I don't know if you find the same, but I tend to see that they need and want lots of data points around what's there in Germany, what are the plans for Germany, how much commitment is there to the territory. I think they've seen too many companies try and do it with one person, and one person by all accounts never works. And so if you're hopefully the aim is to build a footprint and have a longer term plan, and being able to articulate that to them, I think gets their attention. And things like GmbH, local customers, German language version, all that sort of stuff. I find that region and probably France goes hand in hand, are big things that they look for and probably get quizzed on.
Right. Yep. Good. So moving on to the UK, hugely competitive still, and financially driven, sadly, because not most, but there are a lot of companies that are choosing to fix their recruitment issues in a lazy manner by throwing money at the problem. And by that, I mean offering big base salaries, big OTEs, with questionable earning potential, but with the plan being to kind of bamboozle salespeople into having the dollar signs spin round in their eyes and to go where they think the money is going to come from. We'll cover later on how to handle this situation. It may be a problem that naturally fades away a little bit with the changing market conditions, and if it does, then fine. But as I say, we've got some useful content that we will be covering shortly that is the answer to that, and it's proven and tested and is working for us and our partners. Similar situation in the US, but again, probably not much of a problem in the near future now, given the incoming market recession that everybody seems to be talking about. I don't know whether that's more the media driving that, or whether there's actually some substance behind that, but Steve's got some points to cover around that, which is a useful insight as well. And I'm a recruitment expert, certainly not a finance one, so I'm not going to go there. So one of the questions that we've had come in, which is around the Netherlands. Ultimately, there are some challenges in hiring in the Netherlands, and it depends on the sort of company that you are and the type of people that you're looking to hire. The challenge, if you're a smaller organization, and by smaller I mean probably 200 to 500 employees globally, is that there aren't a huge amount of organizations that are that kind of size with that sort of network in the Benelux or Netherlands region. So you find that you're having to source people from larger organizations, and if you're doing that, it can be expensive because they're on bigger salaries. So that's part of the challenge with that. But again, really, it comes down to network and market awareness and an amount of experience and longevity of hiring into those regions. The deeper your network, the greater that's going to be. Steve, would you add anything to that?
No, well, I'm just also seeing the sort of second question there as well. And when you say normal candidates, I guess the thought process is that people who are used to smaller companies will appreciate there's a trade-off of salary for stock. We are going to cover that a bit later as well. I think gone are the days where I see people drop significantly on salary for stock. So it's about finding, and again, we'll cover this a bit later, but it's about finding the ways where maybe you can, you sort of counteract what areas of experience you want to find. I mean, I guess the the ultimate is, and this isn't a direct plug, of course, but yeah, as an organization, the way we tend to work is we cast the net pretty narrow to start with, so we understand where a company works, who their natural competitors might be. That also includes local competitors and and let's say international competitors. You'll find the international US-based ones are the ones that tend to spend a lot of money and throw a lot of cash at it. Particularly, they're very well funded, and so it's then finding the little pockets where people aren't as well paid. You sort of use the football analogy in a way. The bigger teams tend to spot talent in the in the lesser known teams where they can attract them to the brand and to to the glamour of joining a Champions League team, for example, if we're talking football analogy. So it is about knowing the market and understanding where you can get those quick wins, or let's say where you can get those wins, not necessarily quick. And so, yeah, I'd say it's partly answering your question.
It's getting the source right, isn't it?
Yeah.
If you're targeting the right source that and the right companies that are going to house the sorts of individuals that are the quality that you want and are what are deemed affordable, then you will feed your pipeline with the right candidates. And yeah, you won't go after the big companies with the people getting paid the big salaries, because once they've got it, they're probably not going to want to give it up unless culturally they're unhappy in that sort of environment. And so when you're doing a search, you wouldn't rule those people out. You would still contact them. And in our situation, we would understand what is important to them. And it's not always money. In sales, it normally is, but in the other roles, it's not. And so size of company, journey, having that stock upside that Steve talks about, and aligning the right drivers to the right people will bring the right flow of candidates. But often that therefore means you need to speak to more people. That's a time-consuming exercise, which is the sort of thing that the companies partner with us to do, so that we invest our time to do that. And then you put 100, 120 plus candidates in the top of the funnel, and then you get what you're looking for come out of the bottom. It takes time and work, and with whatever recruitment partner you're working with, whether it's internal or external, taking the time to identify that source that Steve's talking about is ultimately going to set you off on the right track. So I hope that covers that. If not, shout. I've now lost control of my PowerPoint. Bear with me. So this brings us on to buoyancy of the market, and over to you, Steve.
Yeah. So and so this is kind of a backdrop as to what's brought us here. And we've talked a few times now about candidate-driven market and very highly competitive. And I guess what does that mean in essence? Well, what by candidate-driven market we are saying probably too many open roles and not enough open-minded candidates and individuals to fill them. So the candidate's king. They end up having a bit of power because they're when they start to look around, they're approached by multiple, and then it turns into a bidding war, which is kind of created this perfect storm, which we'll go on to a second, which has been exaggerated by the factors. And when we say competitive, we're seeing, and Andy, you'll probably I think agree, great people are being approached five times a day with different opportunities.
Yeah.
And there's no real gauge as to how good those opportunities are, because there's has been an awful lot of money out there funding some good, some average, and some not so good technologies. And of course, when money's flying around, it's difficult to look past that for some people, because they think, well, money's there, it must be good. And obviously it's not as straightforward as that. But we sort of found ourselves in this perfect storm and I'll sort of use some crunch-based data. It's one of our, certainly our sources to go to help us, understand where funding is, funding levels, where it's going, where it's not going, all that sort of stuff. So it's a useful source if any of you have or haven't seen it to take a look at. It kind of started with the pandemic. When the pandemic hit, we had probably a quarter, certainly 1 quarter, maybe 2 quarters, where everyone hit the panic button, paused everything, thought, where do we go? What do we do? They basically created this backlog of hires that just didn't happen, and everything went on hold. Then, particularly for us in the technology sector, it quickly became apparent that technology was an enabler for everything that needed to happen in a pandemic. so whether that's food delivery, clothes, you name it, remote working, collaboration, all of a sudden the market said, well, actually, why are we pausing? This is actually going to rapidly accelerate digital transformation and all these different agendas that were driving the way that global enterprises worked. So you went from nothing to trying to backfill, let's say backfill for want of a better term, backfill hires that didn't happen, for maybe a quarter or two, but then this accelerated investment in hiring off the back of the VC saying, right, we see the opportunity now. So to give you an idea, last year 643 billion compared to 335 billion was invested by VCs. That was 92% year-on-year growth. Late stage and technology growth startup. So this is kind of, I guess I'd put this into the Series C or later category, raised 196 billion more than in the previous year. So that was for a total of 413 billion in global venture funding. So that's Series C or later. So what we call growth rounds, where product is baked out, market is identified, and then it's about growth hiring. It's typically sales and marketing, build the engine, drive it, go fast, scale, and all those good things. Early stage still received a lot more as well. So again, we talk about, it was across the entire technology industry, really. So early stage startups raised 100 billion more last year. So it was 201 billion. And seed stage startups raised 10 billion more in funding in 2021. So I guess the wider factors that we're talking about here, all of a sudden everyone needed to hire, and there was sort of swathes of hiring. There were rounds where companies that we were seeing were getting 200, 300, 400 million in Series C, D, E funding, and of course they're saying, right, we want the best talent, and we want it fast. And of course, everyone doing that, or certainly a lot of companies doing that. Everyone was getting approached. Multiple people would have multiple opportunities to discuss, and then all of a sudden, again, a bidding war happens and salaries start to rocket. Now, Andy touched on this. We are seeing, I guess, so to stop you from feeling like this is uncontrollable. The VC reset is starting to happen. So this is what we're seeing as a sort of a trend now in the market. So as a result of some of the wider economic factors, the VC community has had a bit of a reset. So lending criteria is changing. So seeing a bit of a pullback in late stage funding. So that the areas that we talked about that have this huge funding last time around in the last year and a half, they've pulled back significantly. So at the moment, averages monthly are 40% less. So what you should start to see is actually the volume of opportunities that someone can consider starts to come down. So we start to see that, to Andy's point, things get back to hopefully normal. Hopefully it doesn't revert the other way and everyone stops, which I don't envisage, because technology is still the enabler. But you will start to see things slow down as balance returns. People get less opportunities to consider. It becomes less aggressive and less competitive, and some of those bidding wars will stop. So who has suffered? Going back to the statement, we've seen some layoffs actually in some of the Series C and beyond type businesses. The likes of Lacework, Klarna, OneTrust, Cybereason, Terminus, Data Robot. They've all made layoffs. So again, these are not just companies that are not hiring. We're having companies now start to lay off people to rebalance. I think the lending criteria is geared more towards how sustainable is your growth. It's not based on this I guess astronomical trajectory. It's much more about how profitable are you, how much are you growing organically as well. And so we're actually seeing some people laid off in some of those businesses too, which again, these candidates come back into the market. It means that more candidates are available, and for slightly less opportunities. So again, you're seeing this balance. So don't panic and think actually we've got to keep spending money. I think will start to to rebalance now. And again, we'll go through a few topics that will help us to to sort of, or help you rather, to be able to address this. Who are the winners? The winners are probably the earliest, the sort of the seed funding, really, the seed and Series A. They're still getting the funding. I think because their funding is not based on these astronomical figures. And again, the industry always looks for new, exciting, disruptive technology. They are still getting their funding. So that again is a good sign. I think that the market will continue its buoyancy from a technology standpoint, but it will just rebalance that in terms of the pockets that it goes into. And that then ties into the last statement. What we believe is the future and how it relates to hiring. So I'd say a much more balanced market, and a better opportunity for people to hire a bit easier. Anything to add, Andy, on that one?
No, I think the reality is that there is this reset that you're talking about. I'm hoping that I don't regret and have to eat my words, but I think it's probably going to be a good thing for the industry in general. And it just dilutes this overinflated situation that's been going on in recent in the last couple of years. So yeah, time will tell.
Yeah. And then, so going on to the next topic, on the next slide, and if you could do the honors. So I guess a bit of information around the.
I need a Chris Whitty clicker.
Yeah. The salary. Actually, I'm looking at two, so that's probably why I'm not seeing it go through. So, salary trends to start with. During this sort of aggressive rise, we've seen as much as plus 20 to 30% on base salary. Now, Andy alluded to that, and this is in such a short space of time. And that was not just in sales; that was across sales, marketing, CS. We've got a technology division as well. So, developers and coders, all those sort of stuff. It's been sort of universal across the board. So it's not in any one sector. Candidates that were a few years of experience, earning 60K, all of a sudden find themselves being able to command 75, 80K. That's a meteoric rise in a year and a half. So that's the type of aggressive expansion we've seen in salaries. Hiring trends. I'm not talking on behalf of everyone, but we've seen a lot of sort of squeeze on a certain demographic. So again, maybe it's specific to the technology sector, but the sweet spot, I think, has been sort of 3 to 6 years of experience. And so you've seen everyone gravitate towards this level of experience. And so actually that pocket is where the salaries are hyperinflated. So if anything, you get a bit more relief on the experienced end of the spectrum, and part of our sort of education to the client, and maybe some things to consider for you guys is that actually, if you look where the demographic rather has been squeezed, you can actually gain some wins, I think, at the higher end of the experience spectrum, because their salaries haven't gone up as much. Obviously, albeit still a bit more.
You're getting more bang for your buck.
Yeah, exactly. And I think what we've done with our clients in particular, we spent a lot of time with them, talking them through these trends. What's happened, what this perfect storm is. They are not unaware, because they're commercial people and they'll be switched on to what's going on around them. But actually, if someone's not telling them, look, guys, this is happening in the market, this is the result of all these factors that are happening, they'll kind of almost sit in their ecosystem or in their bubble and think, well, actually, we can keep on spending, or why is this spending going up? Why are we having to pay so much more? So I guess the first point we've done with everyone is educate them, and that then at least gives them knowledge. It doesn't put, for us as hirers, it doesn't put the onus on us. Why aren't you finding us great people? Well, we need to readjust. And the simple answer isn't spend more money. Some might do. They might have deep pockets if they're well funded. And they might want to keep up with that trend, but again, we'll give you a few things as to why that's not necessarily the only way to go. And then on the other side, from the work that we do with the people that we're approaching, it's about educating the candidate. So as an example, this is way above the norm and way above the traditional norm of where salaries will be. So, if we're involved in a recruitment process with a young salesperson that's used the thing that we've been talking about the most, of course they're targeted, they're focused on getting the most bang for their buck. The sort of the highest salary. They're at the point where they're mortgages and families and stuff like that. But actually, the industry will inevitably balance out. And so you've got to be careful. If you're pushing too hard, if you're pushing the boundaries of that business too much, what will happen when things start to even out? All of a sudden, you're the one with the head, too far above the parapet, and maybe in line for the first cut if a business has to make such decisions. So it's about sort of opening their mind to things just beyond money and saying, well, this is the bigger picture. Qualify different things, not just the earnings or base earnings anyway. And then as a knock-on effect to that, again, the education of the candidate is, not well, where's that money coming from? Basically, when salaries go up, targets go up. That is the reality. So they can't continue to pay higher salaries. That it's certainly it doesn't make commercial sense if the target attached to that person's head isn't going up as well. So yes, they're going to be coming in maybe with a higher base, but is that target unachievable? Again, are you going to the point where you're going to only just reach OTE, and therefore actually if you were earning a lower salary with a lower target, would you be getting into accelerators quicker? Therefore, would you be earning more? Again, you've got to put the balance on it. Would you, as a result of taking the higher base, actually, if you go and do, I don't know, 150% of your number, for example, which with a higher target would be, say, 120% or 100% of your number, where are you better off? And sometimes it doesn't work out that the base, the high base salary always is the benefit. So again, it's an education point for the candidates.
It's about understanding. A key point with if we're talking about sales roles is that you need to leverage why someone going to want to work with you, and it should be hopefully because of the earning potential, because of a compelling comp plan that is being successful with existing employees that you can celebrate and shout about. And I don't mean telling people exactly what your employees are earning, but giving some fact points around where they are. And to the right people, that will resonate. And you don't therefore have to go chasing after them with the base salary, because, as I said earlier, it's not just about money. It's about having a product that is a leading product, preferably, that is a must-have, not a nice-to-have, with good leadership, good culture, a good work balance, which is a bigger thing now off the back of COVID than it's ever been. Which I'm all for as well, but there's a balance. I noticed one company have gone to a 4-day week, I heard last week, and I'm not sure how I feel about that, but that's a topic for another day maybe. But
Paul.
yeah, exactly. Hi Paul, we've made a decision. But it's playing to your strengths, and if you're attracting salespeople, you need to think about what your financial strengths are, and not get it caught up on it just all being about base salary. It will mean that you're going to bang your head against the wall with some people that aren't going to get it, and so ultimately they're not going to join. But equally, I would argue that by natural selection, are they the people that you want to be hiring? Are they not the people that are coming in for a cushy gig and that are just going to ride a wave on their base salary? So yeah.
And actually, you just caused me to think of one additional point, actually, Andy. So the way that we represent our clients and the opportunities that we work on, particularly in sales, they are focused on, we get certainly quizzed and qualified by the best people on how many people in that business are consistently earning the number. Well, guess what? If you've paid all of them 20% more than you should have done, and your targets are 20-30% higher than they should have been, no one's hitting the number, to then go and attract more talent by saying, well, how's everyone else getting on? Well, they've got great base salaries, but they're not hitting the number. That's just it's not gonna be a marketing and sales tool for you to bring people into the business.
They're going to feel the pinch.
Yes,
it's coming, and that's their problem.
Yeah, well, yeah, more than anything, I've seen a trend, and again, just thinking about it as we talk, more than ever, I reach out to people who are 3 months into their new gig. Was it what you thought it was from the outside? Was that base salary indicative of where the company is today? How people are getting on, what the opportunities like? Because people get oversold and overpaid. So 3 months in, all of a sudden, yes, they make a mistake. Their attitude changes. They rebalance what's important to them, and it's actually a good time to be talking to people because, I'd say there are some average companies that end up with a lot of money and thrown at candidates.
Yep. Okay.
And then I mean, last point tying into that is that the education of the candidates. I think we touched on this actually, but the balance view of the criteria. It's not just the salary; it's the leadership team, it's the levels of funding, it's the consistency of earning across the sales team or across the business about how they're performing. It's the trajectory of the organization, the career potential. Again, that's another thing. If you build proper career paths and can show and demonstrate that people are progressing through the company, again, that's another point that people always lean towards. A company that's prepared to invest internally, hire, as in promote people through, and demonstrate that and show, and then backfill at the more junior levels. Again, you save yourself money hiring at the junior end of the spectrum, but more importantly, you keep people loyal, you keep them progressing through, and you lose less of them. And it's again a great tool, a great sales and marketing pitch to be able to attract talent. And the final point is where to compromise, and it's this is a point that we talk to our clients regularly about is, if you don't have the ability, you don't have the deep pockets, you don't want to, or how and where do you compromise? Because something has to give, and as a partner who we are a consultant at the end of the day, we're consultants. We are saying to them, look, if you can't spend that, where do we go? So, do you want to compromise on what that person has sold? Do you want to compromise on the years of experience? There is always going to be someone to do that role and be a great fit for the business, but you just then need to work out what's the most important piece of that for you. So yeah, cool. I think that's that topic covered.
Yeah, and that brings us on to the importance of an efficient hiring process, and this is where I think the main wins are, that are easy to control, that don't cost a great deal. But we see so many companies in our experience not get it right and suffer as a result. Equally, we see companies that do get it right and they benefit from this. So the importance of an efficient hiring process and how to get it right really comes down to bearing into mind that yes, we've got these companies that are going aggressive with salaries. They're going to attract a certain type of person. It's going to attract people that are money oriented. And as we've kind of highlighted, we have to question whether they then join those companies for the right reasons. But salary is important. You have to get the package right. You have to look at how to make your organization attractive to the people that you want to bring in. And then it comes down to getting the hiring process right, in my belief. And a key factor here really is about having and just to recap on these points to make sure that we haven't missed anything. A compelling comp plan is key if we're talking about sales. This is it being uncapped and having evidence of people making good money. A clear understanding of what the software does and how to set it apart from the competition, and a good ROI, so that it's a must-have solution rather than a nice-to-have helps. A compelling culture, but an efficient two-way hiring process is where it's won and lost. So what does that look like, and what do we do with that? So I'm going to give you an example of a real-life situation that we have trialed, run, and successfully implemented. It was coming out of the summer period last year with Cooper, and their CEO Rob Bernstein decided, seemingly overnight, and I'm not exactly sure why it was overnight, but there must have been some contributing factors. But he decided pretty much, and he came to his talent team and said, right, we're going to hire 100 people globally, salespeople, and we need that done within 2 months. They then, when they gathered their jaw from the ground, thought, right, how are we going to do this? What are we going to need to do? They put the necessary partners in place. We worked with them on helping them with this within EMEA, and they successfully achieved this goal. And part of the process that we collaborated with to get this together was to get a streamlined process where everybody gets what they want, everybody gets what they need. We're not cutting corners, but we're getting it done in a timely fashion, because of how competitive this market is right now. The longer your hiring process is, the greater the probability that the people that you're trying to hire get tempted by somebody else that's either paying more or has done a better job with their hiring process, or they've just run their hiring process better, that make them look from the outside in like a better company to work with. And that's really a key there that we don't want to underestimate, because this costs nothing. So getting this hiring process done was the basic concept of having a three-stage process with a panel. But what we do is we book all of those processes in at the beginning, meaning that we can get this hiring process done within a 2 to 3 week period. That way, then the candidate knows exactly what to expect, knows what's happening when. We can book in advance so that we've got those meetings booked in before diaries start to get filled up by both the candidate and the client. And it means that if at any stage throughout the first, second, third, or final presentation, if things aren't working out for either party, you can effectively then remove or cancel that process with that individual, explain to them why, explain to them, give them constructive feedback, and then you can then free up that time in the diary with the relevant people that have been booked in. But the point being that you've got a nice, efficient, slick process. Everybody knows what's happening. Everybody knows what's going on. And the compelling difference that makes from what we see so often with companies that are like, well, okay, we've got a 3-stage process, and yeah, we need these people now, so we're gonna fast track this. We're gonna make this our priority. Okay, so how long do you want this process to take then? And we'll often get told, oh, we can do that in 2 or 3 weeks. Okay, great. And then we go on the journey, and then inevitably we come up with a short list. We then wait a couple of days for feedback. They decide who they want to move forward with. We then try to book those meetings in, which often can't happen straight away. So let's say we get that first stage booked in with maybe 5-6 working days from then. That's 1 week gone. You then have that meeting, you then debrief, you gather all the information, decide, yeah, everybody's positive. Okay, well, let's move ahead then. Right, let's move ahead. Let's book in the second stage. That then takes another 5-6 days. Then you get to the third stage. That's another 5-6 days, but there's a presentation on that one, so they need a bit longer. So we're already, we're doomed before we even get going. And that's on the basis that the availability is actually looking okay. You then factor in holidays. You then factor in people's diaries are busy, end of quarter, QBRs, just general life getting in the way like it does. And before you know it, this process is well over a month. And no one wanted it to be. Everybody wanted to do it in 2 or 3 weeks, but it was destined to fail from the very beginning. Set it all out up front, get it booked in. If you have to move things, so be it. That way, then you've got complete alignment between candidate, hiring managers, recruitment partners. Everybody knows what's going on, and it works. And the thing that really kind of resonates, I think, not just with salespeople here, but when you've got a process that is well run, as close to military precision as you can get, how does that look for the candidate? We're not rushing them. We're not going to force them to join this company sooner than they're ready. But what must it look like to them to think of what this company might be like to work with? What might it be like if you've got a really good, high quality enterprise salesperson who's got a prospect and they need to get a contract across the line by the end of the week? yeah, are they going to get the vibe that this company have got their act together and that can move and can get things done? And how is that going to compare to the other company that's been taking 4 or 5 weeks to get their act together, and they say that they're really keen and they want to move quickly, but don't? Yeah, all of these things are factors that don't really cost anything in terms of money. They cost a bit in terms of time and planning and prep. You'll need some sort of recruitment coordinator because there's lots of meetings that are getting booked in a relatively short period of time. But yeah, that investment is relatively small for the win and the gain that you get. So that's really where it sits. Right before you get that hiring process up and running, get your hiring managers, stakeholders, recruitment partners, talent, HR, get them all on an alignment call right at the very beginning, all agreeing on what the profile is, what the brief is, what the ideal background of the candidate will look like, what the hiring process is going to be, what the milestones will be, so that there's alignment and there's accountability. And if you follow those steps, you are in the optimum position to give the best candidate experience possible, whether they get the role or not, and ultimately are going to give yourself the best platform to be able to capture the right people. So that really brings us on to the kind of key takeaways, really. And the main thing is that, yeah, this perfect storm is looking like it's coming to an end, hopefully, and therefore the market should come to us, generally speaking. When it comes to the package, get the overall package right. Don't get caught into these overinflated base salaries, and certainly don't sort of feel obliged to throw money at solving your hiring problems to attract the right people, because the other elements that we've discussed cost less and mean more to the right people. And people will then be joining for the right reasons, which means they're much more likely to stay and stay for longer, which makes them a much better investment. Top candidates can be attracted by seeing how good you are to work with and work for, and their window for that will be how you manage your hiring process. And they're looking through that window and then wondering, well, if this is what this is like through this window, then that must be what it's like once I'm on board, and what that organization will be like to work with deeper in once they're on board. And ensure that your internal talent delivery team and or your external recruitment partner are well versed on what is attractive about your organization, what are the strengths that you bring, and that they're well practiced and networked to hire in the hard regions, such as the DACH region, with these clear messages. And also make sure that they can competently present your vision for your business and why an A-playing candidate should want to work within your company. And we believe if you follow those steps, then you've taken a big step in the right direction to capturing the best people. And yeah, I think we've covered all the topics that we had. I haven't seen any more questions come in. Steve, is there anything else you wanted to add?
No, I think the only one thing I didn't cover actually that I wanted to partway through, if you're going to make 1 or 2 hires where you're going to invest more than anywhere, I'd personally put that money in, or where I've seen it work is put that money into leadership. By hiring a great leader who can attract, coach, develop. If you spend 10-20% more on any one hire, that's probably the one that I would do it on, or the ones that I would do it on, and then allow them to bring people through.
Shall I ask Paul for a pay rise? Or will he say you're not a great leader?
Yes.
Well,
timing is everything. It's all in the delivery.
And on that bombshell, thank you everybody for joining. I hope that there was some useful points here that you can take away. If you have anything else that you want or need, then please don't hesitate to reach out to either of us. We will send this out to you via email as well. And yeah, thank you again for attending this morning.
Thank you, guys.
Thanks. Bye for now.
Bye-bye.